Hey, what's up, guys? While Bitcoin is going through some turbulence, I will give you a reason to remain bullish. In this video, I'll present top experts with their Bitcoin price predictions for 2021 and beyond. This video is presented by BlockFi. BlockFi provides financial products for crypto investors such as high-yield interest accounts, USD loans, and no-fees trading. With BlockFi, you can get up to 8.6% APY. It works with Bitcoin, Ethereum, Litecoin, or stablecoins. Do you need cash? Now you do not have to sell your crypto and pay high taxes. With BlockFi, you can use your crypto as a collateral to get a cash loan. Now, BlockFi utilizes ACH that will enable users to connect their bank accounts with BlockFi and deposit/withdraw funds into/from BlockFi with no fees. Also, just recently Visa partnered with BlockFi to release a new credit card where users will receive 1.5% back with Bitcoin. Right now, you can earn up to $250 of crypto bonus when you open a new account and sign up with the link blockfi.com/Aimstone in the description box below. So, what are you waiting for? Sign up today. First on the list is a billionaire Chamath Palihapitiya, an American venture capitalist and the founder and CEO of social capital investment firm. Let's take a look what is his Bitcoin price prediction.
All right, Chamath, we don't have that much time left. Let's talk rocket ships. First, Bitcoin. That falls into that category because that's what that is. 39,000. Where's it going?
I mean, can you play the clip in 2012 and 13 when it was at 200 and everybody was laughing at me on CNBC every time I would talk about Bitcoin? Where is it going? It's probably going to 100, then 150, then 200,000. In what period? I don't know. 5 years, 10 years, but it's going there. And the reason is because every time you see all of this stuff happening, it just reminds you that, wow, our leaders are not as trustworthy and reliable as they used to be. And so just in case, we really do need to have some kind of, insurance we can keep under our pillow that gives us some access to an uncorrelated hedge. And it's going to eventually transition to something much more important. But for right now, you're just getting all these data points that prove this thing. It's just the fabric of society is frayed. And until we figure out how to make it better, it's time to just have a little schmuck insurance on the side. And everybody's running in. It's just an incredible thing. I could never have imagined it.
Good to be a schmuck, I guess, if you got in early and it goes to where you think it's going to go.
I want to see that clip from back of 2013 where CNBC team was laughing on Chamath when he was talking about Bitcoin. Overall, his Bitcoin price prediction is 100k, 150k, and 200k per coin. He isn't too certain about the time frame, which is, I do not blame him. The main catalyst behind his thesis that Bitcoin is uncorrelated schmuck insurance that has the potential to transform into something much bigger. The next one on the list is Anthony Pompliano, an American entrepreneur and investor. Let's take a look what he has to say about Bitcoin.
So when you think about kind of the opportunity that we're looking at here, if there continues to be fixed supply, meaning that basically the code continues to execute as it's supposed to, and you get a kind of that supply shock that just occurred in May of this year, and then that's coupled with a demand shock where there's a lot of people with a lot of money coming in and trying to adopt the asset, you're going to get a increase in the US dollar price of the asset. Now, one of the things that people always forget is they say, oh, there's 18.5 million Bitcoin in circulating supply. Kind of. Yes, there are 18.5 million in circulating supply, but if you think about 63%, 65% of Bitcoin haven't moved in the last 12 months. And so all of a sudden you couple that with, let's say, like a Grayscale GBTC, where they're basically buying Bitcoin and they're putting it in cold storage. It almost like disappears. They call it like the Bitcoin black hole. And so actually you've got about 65% of Bitcoin that hasn't moved, which means out of 18.5 million, you're talking about 11 million or so that have gone nowhere, right? 10 million that have gone nowhere. And so really the addressable supply is, let's call it, plus or minus 8 million Bitcoin in the market. And so when you start looking at that, you're like, wait a second, this is interesting, because if all of a sudden only about 8 million Bitcoin are available and all this new demand is showing up, you're going to have a pretty aggressive price increase because there's just not any Bitcoin, right? And I keep saying that, like, Bitcoiners aren't selling their Bitcoin. And so I think that those market dynamics are going to drive a very aggressive price increase. Earlier, I think this year or end of last year, whatever it was, when we first broke 10,000, I wrote and said, I think we're going to hit 100,000 before the end of 2021. Literally, people were like, "That's insane! You're crazy!" All the stuff. Now all of a sudden, I'm somehow the most conservative person because everyone else is throwing out these wild numbers. 200, 300,000. I have no clue, right? All I know is that it's going to be pretty aggressive. I've got pretty high confidence in $100,000 by the end of 2021. We'll see.
His main thesis behind his Bitcoin price prediction is the asymmetric supply and demand curve. As he mentioned that supply is limited. Many cryptocurrency providers move large sums of Bitcoin into cold storage on behalf of financial institutions and high net worth individuals, aka their clients, while demand is still creeping up, and his prediction is $100,000 by the end of 2021. I think 100K is more than possible, considering the fact that the year just begun. Next on the list is Max Keiser, an American broadcaster and filmmaker, also one of the earliest Bitcoin adopters out there. First, he bought Bitcoin under $1. That is crazy. Let's take a look what is his Bitcoin price prediction.
I'm going with $220,000 per Bitcoin as a 2021 target, and that would bring us up to over $4 trillion market valuation, which I think is a good 2021 objective. We were going to catch up to gold. That would bring us up to not quite half gold's valuation, but getting close to gold's valuation. I think the catalyst is going to be, as I said, a major central bank failing, plus the money printing is going to go absolutely Weimar Republic. So we're going to see that, depending on how you calculate this. There's certain trends that you can put into your calculation. So we just had a halving, right? We had the third halving in Bitcoin. There's three things in Bitcoin that people like Nouriel Roubini never mentioned: the halvings, the difficulty adjustment, and the hash rate. Now, that would be like me being a real estate broker and trying to sell real estate and telling people that I don't know where the house is, I don't know how big the house is, and I don't know who owns the house. Would you be a successful real estate broker? No. So Nouriel Roubini never mentions the halving, the hash rate, or the difficulty adjustment. And he pretends to come across as somebody whose opinions we should have some respect for, when clearly he's a propagandist, NYU, lackey, kind of fart inhaling moron. So the halving happens every 4 years. So the supply gets cut in half. So that then you input that into the demand. So the demand is going, the demand's going higher, right? All these huge money folks are coming in to Bitcoin. Then the supply is shrinking. For example, there's 900 Bitcoin a day that are created, and the demand is over 4,000 a day. So that should tell you something right there. If you look at the exchanges, there's Bitcoin, kind of a snapshot of how many Bitcoin are circulating or in existence, being moved around. That is shrinking rapidly because institutions are taking Bitcoin. They're gobbling up that Bitcoin. We're going to enter a Bitcoin shortage. So a couple of things we haven't seen, we're going to see in 2021. We're going to see gap pricing in terms of price discovery. So, okay, it's 36, 37,000. Once you get above 40,000, that panic buying from institutions comes in. You could see 42,000, and then the next print be 44,000. Probably this 220,000 number, probably you're going to see that in October, November will be the high of the year. If you look historically to how the Bitcoin's traded versus the halvings and the demand and the difficulty adjustment and the mining industry and the acceleration of the technology in the mining industry and how efficient miners are, the cost of electricity, right? That's also a factor in this calculation.
Max Keiser is going with $220,000 as of his 2021 target. That would be over $4 trillion of market capitalization, and Bitcoin would take over 40% of the gold's market cap that currently valued at $10 trillion. The number of his catalysts that may drive Bitcoin to that price is weakness of central banks, money printing, Bitcoin halving, the difficulty adjustment, and the hash rate. The combination of those elements will send Bitcoin to the moon. Next Bitcoin proponent on the list is Salvatore Moos, an economist, the author of my favorite book, Bitcoin Standard. Let's take a look what he has to say about Bitcoin.
Bitcoin being digital gold or an alternative store of value. And some people enjoyed your last slide comparing the total value of the FX market. What do you think the ultimate market cap for Bitcoin could climb to? Is it capped at, basically taking some market cap from gold and those two assets being your two main alternative stores of value, or how large of a market cap do you think Bitcoin could eventually have, and what's the path to getting there?
Really, it's a scary question to consider because you try and draw the line on where demand can stop, and you keep struggling. So you could say gold. I think, demonetizing gold is a realistic goal, and turning gold into an industrial metal. That can happen. So Bitcoin can eat that market. It won't mean gold will go to zero. Obviously, it'll become just an expensive industrial metal, but you have to also remember that a lot more of global markets are essentially just looking for a store of value, or they're not looking for investment that yields returns. There's a lot of money that is just looking for store of value. And so a lot of real estate, a lot of people buy homes that they don't really need because that beats inflation. And a lot of people invest in all kinds of things. And like bonds, for instance. So Bitcoin could eat into the market for real estate, could eat into the market for bonds. And so these things could lose a significant amount of the demand that comes to them because people don't have a solid store of value that can just offer them, that can be the base of your portfolio that you don't take risks with. And Bitcoin, if it grows into this kind of digital gold, it can offer people that. And so you can imagine then it would reduce the demand for other markets. And then really, the sky's the limit.
Well, first, Salvatore Moos believes that Bitcoin's big milestone is to demonetize $10 trillion of gold, in which case Bitcoin would be around $500,000 per coin. Then he also said that Bitcoin can eat into the markets such as real estate and bond market. Global real estate is the biggest asset class in the planet, bigger than bond market. Total real estate valued at around $250 trillion. Let's assume that if Bitcoin takes only 10% of that market over a long period of time, that would put Bitcoin's market cap at over $25 trillion, and therefore a single coin would be around 1.5 million bucks. Bond market is at around $100+ trillion. If Bitcoin takes 10% of the bond market, that would put a single BTC at over $500,000. Next Bitcoin advocate on the list is Plan B. Plan B is an anonymous institutional investor with quantitative financial background. He became very popular after creating Bitcoin stock-to-flow model. Let's take a look what he has to say about his 2021 Bitcoin price prediction.
Investor groups are specifically open to recognizing asymmetric bets like Bitcoin. So once they see it, they will go in. It's just too yummy not to. And so I think it will grow gradually. Also, the gold investors are of course very much into the Bitcoin vision of sound money, scarcity. The only problem there is that it's a lot of older guys that don't have IT or programming or necessarily quant background. So you see the gold community divided in two groups: the old ones that want to touch the gold and feel it and want to have it physical, and the newer generation that believes in sound money, shares this view with Bitcoin, and actually understands what peer-to-peer is, and elliptic curve encryption, and all those things. So yeah, I think that's how it goes. It goes automatically, and it's a momentum that cannot be stopped.
Are you too late though, or is this the beginning really, or are we still in the first innings of Bitcoin? Yes, I know 2014 Bitcoin traded at $154 per coin, and it's now 18,000, and so that looks late. But when you think about the potential for Bitcoin, are we still in the early innings? We are, definitely. We're not late, but it's more the feeling that everybody who goes in has the feeling that he's late. So I had that feeling at around 400
because I missed the 100 part. And before me, of course, there were people entering at 10 or 1 or even below $1, right? And so
of course.
But yeah, no, we're very early. I think in the adoption terminology, we would be in the innovator stage, not even the early adapter phase. There's not even 2.5% invested in Bitcoin. So we're very, very early. And that's also what my models show, because this upside is immense. And yeah, no, it's always scary to enter. You always have the feeling you're late, but you're not.
You've talked about this stock to flow cross asset model for valuing Bitcoin. You've invented it. How does that work? Describe it to a layperson.
Yeah. So when I read the white paper, and later also Safeteen's book, The Bitcoin Standard, I think you had him on the show yesterday.
Yes.
Beautiful book, must read. He talks about stock to flow as a measure for scarcity. So there you have the two combined. Bitcoin is scarce. How do you measure scarcity? You can do it with stock to flow. I knew stock to flow from the gold community. Gold investors use stock to flow to measure the scarcity of gold and silver and platinum, etc. My insight was to relate that to the market values of gold and Bitcoin and diamonds and real estate. So I plotted the stock to flow, the scarcity on the y-axis or the x-axis, and the market value of the total market, Bitcoin market, diamond market, real estate market on the y-axis, and also the historical path of Bitcoin. And what you see is that there is a almost perfect linear relationship between those assets and between Bitcoin's path towards the scarcity of gold and real estate. So that's very interesting and mathematically very hard to deny. So yeah, it's a relation between scarcity and value, and you can exploit that. Okay.
Your macro view, when you think about price trajectory for Bitcoin over the next 5 years, what do you think it is, and why are you so bullish?
Yeah, my macro view is also a quant view because my background is very quantitative. I have to have numbers. That's why I made this stock to flow model. That got me my name, and what that model shows, it's based on scarcity, on the 21 million, and it compares the scarcity, it quantifies it to gold, real estate, silver, diamonds, etc., etc. If you look at that trajectory, what we had last 10 years, where it could go to the levels of gold and real estate, then I expect Bitcoin to do another 10x or 20x. So it will go to, well, north of 100,000, maybe north of 300,000 before Christmas next year. And that sounds really bullish. That sounds maybe ridiculous to some people, but we've done that 3 times before. And it's this very asymmetric return.
Plan B believes we are still very early in terms of Bitcoin adoption. He believes, based on his stock to flow model, Bitcoin might reach somewhere in between north of 100K to the north of $300,000 before the Christmas of this year. I like that confident interval. I think Bitcoin has a high chances to be somewhere in between those numbers by the end of 2021. Next on the list is RollPoll, the founder and CEO of Global Macro Investors and Real Vision, a former Goldman Sachs hedge fund manager. Let's take a look what he has to say about Bitcoin.
You are a strong proponent of Plan B stock to flow model, which predicts Bitcoin will reach $280,000 by 2022. We had Byte3 CIO Charlie Morris on our show not long ago, who claimed to have debunked the stock to flow model.
Well, I suppose that you sum it up by it's too good to be true. I mean, it would be really nice if that model was true.
According to him, the assumption that diminishing supply will be driving Bitcoin's price up is false because supply does not create value, demand does. And if Bitcoin becomes too expensive, demand for it will decrease accordingly, which in turn will drive down its price. So what do you think of this argument?
I think it's nonsense. And the reason being is The price of Bitcoin is not like the price of an equity, which is a P ratio and stuff. It's just a monetary number. So there is no excessively expensive, excessively cheap. It doesn't work that way. It's driven by flow and its future potential. So none of that is true. Now, Plan B stock to flow model, and him and I have spoken about this a reasonable amount, is there is no perfect model. So anybody who thinks there's some amazing engineer or mathematics guy who can disprove this, it's nonsense. What it is a hypothesis that needs testing. But let's assume Plan B is an idiot. Everything was wrong, and it only goes to 140,000. Was he wrong, or did you make a ton of money? Demand is based in Bitcoin on the network effect. Gold doesn't have that. Bitcoin is a very, very different beast. It's a distributed asset with a network effect. So that network effect means increasing demand over time. That's essentially why all networks have exponential curves. That is not gold.
Wait, but are you saying that gold doesn't have a network effect? Why is it that?
It doesn't have an exponent because it's been around for 10,000 years. Its network is pretty established, right? You're not bringing new adoption. You bring some people back in, some people out, but generally, my guess is gold adoption was higher 100 years ago than it is now.
Mm-hmm.
So can that mean that people come into gold? Yeah, sure, I'm bullish gold. Does it have the network effect of Bitcoin, which has a potential future in the financial system itself, whether it's collateral or payment system or whatever ends up developing? Nothing else has that. Single equities have it, but you've never seen an asset with this before. It just didn't exist ever. We've never had an asset based around technology.
I would like to ask you, what is your outlook for Bitcoin price for the 1 year from now?
Look, I think it's, if I was a conservative, I'd say 150,000. If I'm to be realistic, knowing what I know about the flow of funds, I think I have a feeling that Plan B's model is going to underprice the upside. I know everybody thinks on this cycle the price will be lower. I just don't see it because the amount of money coming into the space. So I actually have a feeling it might be above his target of about 250,000, but I don't know. But I like that optionality. You know, worst case 150, best case north of 250. I mean, find me another trade in the world that looks like this.
I agree that you should not heavily rely on mathematical models when it comes to predictions. If there is such a beautiful model such as stock to flow, let's say, it doesn't mean that Bitcoin price will follow that model for many decades to come. But model is still better than nothing. Nonetheless, RollPoll believes that Bitcoin might hit in the worst case 150k and in the best case of north of $250,000 by the end of 2021. I like that call, we'll see what happens. Probably my favorite Bitcoin advocate is Michael Saylor, an American entrepreneur and business executive, the founder and the CEO of MicroStrategy. Let's take a look what he has to say about Bitcoin.
I think that demonetizing gold gets you to 500,000, and that's simply pulling all the monetary energy off of the gold rock from gold bugs who believe that gold is a store of value and a safe haven. But it's important to note there are a lot of organizations and a lot of investors that don't use gold as their safe haven. They use government debt, sovereign debt. And so cash is a safe haven, and sovereign debt is a safe haven. And another safe haven people use as a store of value is an index fund, bond index funds and stock index funds, like the Russell 2000, the S&P 500, the Dow index. So all told, I think there's between $300 and $400 trillion worth of fiat instruments, cash, debt, stock, commercial real estate indexes, something in that range. They're all, if you look at all of that, half of that monetary energy, maybe more, between 50 and 75%, is simply seeking a store of value as a container. Like when I buy the S&P 500 index or the Vanguard fund, I'm not buying it because I equally love all 500 S&P stocks equally in proportion to their market caps. That's not why I bought the index. I bought the index because I had $1 million and I knew if it was cash, it would be debased in purchasing power. And so I needed to put it into something which was going to return more than the economic hurdle rate or the cost of capital. So some people choose to preserve their wealth by investing in gold. Some people choose to preserve their wealth by buying land, a land bank. I'm just going to buy a bunch of farmland. I don't love it. I just bought it. Some people choose to preserve their wealth by buying debt. Like there's like $100 trillion worth of sovereign debt, right? 10-year treasuries, 30-year treasuries, 3-year, 1-year treasuries. There's like $17 trillion worth of debt that's negative yielding, I think the last number I saw. Why would you buy a bond that you have to pay to own? Right? Isn't the obvious answer? It's a safe haven. Right? I don't want to bury the cash. I don't want to hold cash. I don't want to bury the cash under my mattress. I don't want to hold metal. And so I'll buy a bond until I figure out what to do. So ultimately, the amount of monetary energy in the world that's looking for a safe haven store of value is got to be between 100 trillion and 250 trillion. Like why not all of it? Like why not 300 trillion or 350 trillion? If whatever the total sum of everything. Well, the answer is at the right price, I would own a stock because I believe in the stock. Like, for example, Tesla. If you bought Tesla at the beginning of the year, it went up by a factor of 5. And if you love Tesla, and if you believe it's a growth stock, then you invest. You're making an investment decision. I might make an investment decision in a stock that I thought was going to grow faster than the cost of capital. If you believe that a stock can grow its revenues and its cash flows more than 20% a year, you should probably own the stock, right? If the stock is going to outperform the cost of capital. If you came to me and you asked for a loan and you were going to erect a hospital, and I lived in the city and I had kids and we needed a hospital and I was a wealthy person, I would give you the loan. I would buy the bond so that you could build a hospital so that my family doesn't die if they need the hospital. So sometimes creditors would issue credit because they have a passionate belief in the project. And equity investors would invest because they have a passionate belief. That's investment, and that's true crediting. I mean, credit and equity investments. And the same is true with real estate, right? I might buy real estate to live in. I love it. Or buy a commercial office building to put my company in, or a factory. On the other hand, when I'm buying the index of 187 companies I never heard of that yields me 2% or 3%, I'm just looking for a store of value. So that's a long-winded answer to the question, which is, is Bitcoin worth more than the value of gold? And the answer is, yeah, in theory, all monetary energy that's simply looking for a store of value safe haven index should presumably drain out of real estate, cash, stocks, and bonds into the Bitcoin network. And as that happens, the price discovery will return to real estate and bond, right? A real bond should not pay you 0% interest, right? A real bond should not charge you money to own it, right? That's offensive. So the bond values will fall. The equity values will fall. The real estate values will fall. The yields, the dividend yields, the rent yields, the bond coupon yields, they will go up until a rational actor would choose to own those as an investment, or a person that's a passionate investor will own them because they're trophy assets that they simply wish to own, to say they own them for their own personal purposes. And the rest of the monetary energy really ought to be in a Bitcoin network because it's a pure index of the economy without counterparty risk, without execution risk, without credit risk, without debasement and political risk, without the tax risk, et cetera, and the political risk. That's why that makes sense. And that means that the top is more than 100 million. More than 100 trillion. It's somewhere between 100 trillion and 300 trillion in today's money. And of course, if we look out 5 or 10 years, there may be 700 trillion in today's money then. So if half of the monetary energy sits in a store of value index, then it could be 300 or 400 trillion dollars.
Michael Saylor has a very similar approach as Salvatore Moos, and I think this is a much better approach than any potential model about Bitcoin. If Bitcoin eats into the gold, real estate market, bond market, index fund market, stock market, in the end of the day, around $100 trillion and $250 trillion of monetary energy just seeking a store of value. In which case, if all that monetary energy would flow into Bitcoin, a single Bitcoin would be at around $5 million to $15 million a coin over a long period of time. Let me know what do you guys think about those Bitcoin price predictions. And what is your Bitcoin price prediction by the end of 2021 and beyond? Leave your thoughts in the comment section below, smash that like button and subscribe for more videos.